All right, settle in because today's market action has been nothing short of a roller coaster, and it's got everyone talking. What a wild day on the markets, folks. Stocks tumbled and oil prices surged, all thanks to a rapidly intensifying conflict overseas that's sending shockwaves through the global economy. Seriously, if you're keeping an eye on your portfolio, you probably noticed some serious red today. The Dow Jones Industrial Average closed down 0.7%, losing 300 points, while the S&P 500 dipped 0.8% and the tech-heavy Nasdaq composite dropped 0.9%. This came right after a solid rebound day on Monday. The geopolitical situation is intense, to say the least, and it's directly fueling this market chaos. The conflict between Israel and Iran intensified significantly, starting with Israel launching air attacks against Iran's nuclear facilities and key personnel last Friday, June 13th. Since then, these two nations have been exchanging missile fire daily, sparking major concerns about a much broader regional conflict. Adding fuel to this fire, President Donald Trump unexpectedly left the G7 meeting in Canada early on Monday to address the Middle East. On Tuesday, he escalated his rhetoric, demanding unconditional surrender from Iran and warning Tehran residents to evacuate immediately. Trump claimed the U.S. has complete and total control of the skies over Iran and knows exactly where the so-called supreme leader is hiding, calling him an easy target, but adding that the U.S. wouldn't take him out, kill, at least not for now. Simultaneously, the Pentagon moved military assets to the Middle East to boost defensive capabilities and expand the president's options. This dramatically shifted sentiment, especially after Monday saw hopes for a ceasefire. Naturally, this geopolitical turmoil immediately sent oil prices soaring. West Texas Intermediate, the U.S. crude oil benchmark, was up 4.6% in late Tuesday trading, hitting $75.05 per barrel after a significant jump on Friday. The July U.S. crude oil contract closed up 4.28% at $74.84 per barrel, and Brent crude also climbed 4.4% to $76.45. This surge is directly tied to worries that global oil supply could be disrupted, either through attacks on oil facilities or the closure of critical shipping routes like the Strait of Hormuz, which sees over 20% of the world's seaborne oil pass through it. Iran is a massive player, holding the world's second-largest proven natural gas reserves and the third-largest crude oil reserves. It holds about a quarter of the Middle East and 12% of the world's proven oil reserves, making it the ninth-largest global oil producer and fourth within OPEC. Israel has already targeted several Iranian energy facilities, including the South Pars gas field, Fajr Jam gas plant, Shaharan oil depot, Shar-Ray oil refinery, and Tehran fuel depots. A prolonged increase in oil prices could seriously hike fuel costs, accelerate inflation, and put a huge damper on global economic growth. And that impact is already hitting home here in the U.S. at the gas pumps. Gas prices rose week over week in 38 states and the District of Columbia. The national average for a gallon of regular gas on Monday was $3.140, up from $3.124 a week prior. Indiana, Virginia, and Delaware saw the largest weekly jumps. According to a leading petroleum analysis firm, with Israel and Iran exchanging attacks, oil prices have spiked to multi-month highs, setting the stage for additional price hikes at gas stations nationwide. Analysts are now expecting additional increases of 10 to 25 cents per gallon if tensions continue to escalate. Beyond the geopolitical drama, investors were also digesting some weaker-than-expected economic data. Retail sales in May declined by 0.9%, which was worse than the 0.6% drop economists had anticipated. This followed a downward revision for April's retail sales, which now show a 0.1% decline. Industrial production also fell in May by 0.2%, defying expectations for no change. These figures suggest that consumers might be pulling back their spending amidst ongoing inflation and economic uncertainty. Against this backdrop, the Federal Reserve began its two-day monetary policy meeting today. While nearly everyone expects the Fed to keep the key federal funds rate unchanged at its current range of 4.25 to 4.5% tomorrow, market participants are eagerly awaiting the central bank's assessment of the economic outlook. Officials are particularly concerned about how the impact of new tariffs could push up consumer prices and stoke inflation later in the year. The dot plot, which charts FOMC members' expectations for future rate cuts, is considered the wild card of this meeting, as earlier projections have been shaken up by recent policy changes, including tariffs. The Fed has a dual mandate to balance high employment with inflation control. Looking at specific market sectors, it was a rough day for many of the world's largest technology companies. EV maker Tesla led the decline, falling 4%. One financial firm cut its earnings projections for Tesla for 2025 2025 and 2026, citing struggling delivery metrics and potential negative free cash flow, suggesting a fundamental justification for Tesla's high stock price is unlikely to materialize. Other tech giants like Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta Platforms, and Broadcom also lost ground. The airline sector was hit particularly hard, with shares among the biggest S&P 500 decliners due to concerns about rising fuel prices and potential travel disruptions. United and Delta both saw significant drops, falling more than 6% and 4% respectively. JetBlue Airways closed nearly 8% lower. The struggling carrier CEO reportedly stated that they are implementing additional cost-cutting measures, including cutting unprofitable routes, as weaker than expected travel demand means their path back to profitability will take longer than hoped, and they are still relying on borrowed cash to keep the airline running. JetBlue shares have lost a staggering 46% of their value this year. On the flip side, as tensions in the Middle East surged, oil and defense sector stocks saw gains. Valero Energy, Marathon Petroleum, Chevron, and Hess all rose, with defense contractor Lockheed Martin adding nearly 3%. The S&P 500 energy sector as a whole advanced 1%. However, solar stocks absolutely plummeted today. This was primarily because the Senate's budget bill maintained the full removal of clean energy tax credits. Companies like Enphase Energy and First Solar dropped 24% and 18% respectively, leading the S&P 500 decliners. Sunrun plunged 40%, and Solar Edge Technologies slid 33%. Analysts warned that while the Senate's proposal was a slight improvement over previous plans, it still represents a significant negative for renewable energy investment and could create significant headwinds for storage stocks. In the crypto world, stocks also lost ground as the price of Bitcoin fell to $104,700 around the stock market close. Major Bitcoin buyer, Strategy Corporation, crypto exchange Coinbase Global, and Bitcoin miner Mara Holdings all dropped. Gold futures were down today, marking their second consecutive day of losses after nearing a record high last week. Despite today's dip, gold has outperformed the S&P 500, the bond market, and even Bitcoin year-to-date. Silver, on the other hand, hit its highest level since 2012, fueled by demand as a critical component in green energy and tech innovation. On the individual company front, circuit board maker Jabil was a standout winner, surging over 12% to a record high. The company's fiscal third-quarter results beat estimates, and it raised its full-year projections, citing accelerating AI-driven demand as a critical growth engine. Meanwhile, T-Mobile stock dropped after reports that Japanese investment firm SoftBank Group sold millions of its shares, totaling $4.8 billion in an unregistered overnight sale. This move is reportedly to help SoftBank fund its growing investments in artificial intelligence, including in ChatGPT developer OpenAI and the Stargate AI infrastructure venture. In other big news, Verve Therapeutics skyrocketed over 75% as Eli Lilly announced it would acquire the gene editing startup for approximately $1.3 billion. The deal involves a potential contingent value right if Verve's gene editing medicine for cardiovascular disease, Verve 102, reaches phase 3 clinical trials within a decade. On a less positive note, homebuilder Lennar Corp's shares fell after its second quarter profit missed estimates, even though its revenue topped expectations. The company's co-CEO noted continued softness in the housing market due to affordability challenges and a decline in consumer confidence. Finally, Meta Platforms shares were little changed after gaining nearly 3% on Monday following news of their plans to introduce paid advertising to WhatsApp. Meta has been a top performer among the Magnificent Seven stocks this year, driven by strong AI-driven ad revenue growth. So there you have it, a turbulent mix of geopolitical instability, weaker economic data, and inflationary pressures creating a challenging environment for financial markets. The volatility index, often called the fear gauge, spiked, showing heightened anxiety among investors. While a recent survey showed investor sentiment had recovered to pre-tariff levels, this was conducted before the latest escalation in the Middle East. The outlook remains uncertain, with some expecting a struggle with stagflation, while others see potential for buying opportunities amidst short-term weakness. That's all for today's market rundown. It's a lot to keep up with, and things are moving fast. If you found this update helpful, please smash that like button, subscribe to the channel for more breaking market news, and hit that notification bell so you don't miss out on what happens next. Stay safe out there, stay informed, and I'll catch you in the next one.